Hi, this is Raman and welcome to another episode of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. Today we'll take a look at a bearish flag trade setup. This is a continuation pattern, and here we are looking for price to move lower, basically in the same direction that price has just moved. So let's go on to the charts and we'll take a look at what a bearish flag pattern looks like, how to identify it, how to enter the trade, where to place a stop loss, and as always, how to exit the trade with a profit. Here we are looking at how to trade a bearish flag trade setup. This is EuroCAD 4-hour chart. So in this example here, we see that overall market direction is to the downside. So here we see price comes into support level, bounces off, comes down again, and then comes into this same support and resistance level, and then drops from there. So let's say we missed this trade here, so that we were not able to get into this opportunity, but now we know that market direction is to the downside. So how do we get into this after the fact? So what we do is, now we cannot go back, but what we can do is look to the future and see what kind of opportunities we may get. So what we see here is price drops and then starts to consolidate sideways, and it's holding below this previous support resistance level. So this sideways consolidation gives us a clue that price could drop from here. So this is called our bearish flag pattern here. So this sideways move looks like a flag here, and this drop here is our pole. And now we're looking for price to continue to the downside. One important thing to keep in mind for this one is that we have to make sure that price drops below this consolidation. So if price comes back here and then turns around and goes back, that's not good. So we have to see that price first goes through the support, and then we're looking for a pullback to get a good entry. And the pullback is where you can drop to a lower time frame. Like in this case, you can go to a 1-hour time frame and look for that pullback. So first thing we have to look for is our move to the downside, consolidation. So that's our setup, our flag setup. And to take a trade, we have to wait for price to come out of this consolidation and drop through the support here. So price breaks through the support and we have a nice bearish engulfing candle close to the downside. So this is a good indication that price is likely to continue to the downside. It shows that there is momentum to the downside. Now this candle here is quite a large candle, and generally we get pullbacks. So normally you would get a pullback and price will generally come and test this level once again. So we look for a pullback, and as price is pulling back, once it gets into our support resistance level here, we're looking to take an entry short. So we enter the trade short here, and our stop would have to go on other side of this flag formation, because sometimes price will go into our consolidation and then come back out again. So that can happen. So just be mindful of that. So we have to put stop on the other side so we don't get taken out of our trade. So we enter the trade short here, and then we stay with the trade as price is moving lower. We come into our next support and resistance area, and we see price starts to just hit a wall here. It is not able to break through the support level, and each candle here is 4 hours. So for several hours, price is just stuck at this level, and then we get a bullish engulfing candle close here. So at this point, it's a good idea for us to get out of this trade. So we exit the trade here. From entry to exit here, we get 107 pips in the trade. So just to recap, first we are looking for a move to the downside, and we have to identify a flag formation. So this sideways consolidation here is our flag pattern. So if you see this kind of consolidation following a move to the downside, that's called a flag, a bearish flag. And now we have to wait for price to come out of this consolidation and give us a solid candle close to the downside. And if you were to go to our 1 hour here, so let's go. So this is our flag. So as we can see on the 1 hour, price drops below this and closes. We have a good solid candle close on the 1 hour, and then pulls back into this previous support resistance area, and it holds below this area. So either
at the close of this doji or the close of this red candle here, you can take a trade. So you can drop down to a lower time frame to look at that. So we enter the trade short here and we stay with our trade for as long as price is dropping. Here we have nice solid bearish candles that show that the momentum is to the downside, and then we come into the support level and price just seems to get stuck there. So this is a good time for us to exit the trade once we get a bullish engulfing candle close here. So entry to exit, we get 107 pips in our trade. So our profit is 107 pips or $1,070 if trading one standard lot.
I hope you enjoyed this episode. If you like this video, please feel free to share it with your friends and like, comment, and subscribe below. That's it for today. I'll be back with another episode very soon.